What's going on, traders? It's Kyle from K Capital. It's been a couple days since we last checked in terms of videos, so I wanted to do a quick update of where we're at and some of the positions we recently closed. First and foremost, Cisco, we netted about 14% in this, and roughly, I think it was right under 2 months. So a longer term swing from what we typically do, but nonetheless still a nice trade. Looking at the position and what we did dating back to mid-February, it was a gap and go play for us where we really went long on this volume spike after earnings and really just held it as we tested the 200-day moving average and then saw some additional volume pick up late in the day. I think it was on the 29th and the 1st of March. And then as we really broke through here, we added to the position and continued all the way up to test 29. Our initial target was 30, but nonetheless, we sold this recently, like I said, at 27.91. Our members got the alert on the 28th and locked in that return. So a nice safe play, especially in a market to where volatility has been pretty steady. We'll get to the overall markets and the conditions that we're seeing in the U.S. market soon, but nonetheless, definitely the right time to play out and get out of this position. As you can see, it sold off quite heavily over the last couple trading days. So it's something to where we locked in a nice gain for the time being. Another play that we actually closed out today was one of the shorts in CNAT. We actually went long this position, short, right after we tested the 200-day moving average and pulled down. Really, it's one thing we kind of stalked the stock as we saw it pretty much explode all the way up from 2 to 350. Knew there was going to be some selling, and we went short right around the $3 to 285 range. We watched this play kind of test these highs here in this $3 to 315 range and continue to sell off where we closed out today for a small profit of 5%, but nonetheless, with earnings, it's one thing we didn't want to hold through. They're expecting some news, and as of today at 4:05, they released some pretty decent some pretty decent news in terms of positive results with their phase 2 liver clinical trial. So I think the stock shot back up to above 3. So we closed right at the correct time. Just to give you a snapshot of that alert to members, they got this alert today. This is the entry alert. My mistake. So we went short, like I said, on the 19th. The 284 was one of the initial alerts, and really had a $2 target and a mental stop of 315. And again, we got out today right around 285. What I'll do is I'll pull up that alert right now so we can have a little proof to what we did. So give me 1 second. All right, there we go. So as you can see, here's the actual alert for that trade. So obviously you can see we covered today 268, small gain, and again, our initial entry was 286. So this short play worked out pretty well for us. I still think if there's going to be a huge pop tomorrow and the call goes bad, we'll obviously look to re-short if we can't test and hold the 200-day moving average. But nonetheless, 2 winners in the last couple of days that played out well for us. Another was SKYS, where we went short and banked roughly 19% in that. So again, that kind of leads me to the overall market and where we're at in terms of what I've been saying now for several weeks, specifically probably 3 to 4 weeks, that the overall market is definitely in a bear mode and what I would consider definitely going to be pulling back to prior lows that we saw more or less over the summer. And I think pretty significant that we couldn't test and rehold the 1800 range. And I think there's a bunch of macro theses behind the fact that we're not going to be able to really hold this level. Quantitative easing and the interest rate debacle, I should say, that's going on in the United States really isn't going to be able to prop up the market anymore. And I think if we looked at the technicals specifically, what you can see here is that we consistently tested this pattern and this trend line repeatedly over the last couple months. We've broken through that, but we couldn't really hold the 1800 range, and we sold off pretty heavily over the last week. In my opinion, when the EMA ribbon from the 20 to the 50 starts to point down like this, similar to what it did back in December of last year and the prior summer, you're going to start to see a test of the 200-day moving average and then a break down below to new lows. We tested support down in the 15 to 16,000 range, and I think we're going to probably test that range again. From a macro standpoint, if we wanted to really zoom out and take a look at where we're at, we've obviously been in a nice upcycle for the past couple years, but overall, I think this is the first time where we've consistently tested the 200-day moving average. And obviously, in my opinion, I think that's very bearish and pretty much a very strong indicator that I think we're going to have a significant pullback for the rest of 2016. And with that, we're going to continue to find shorts that are going to be, very liquid and very volatile, I should say, to where, we'll continue to capitalize on those, similar to what we did in CNAT and Cisco, or CNAT and SKYS recently. If we wanted to take it a step further and look at the S&P 500, the area highlighted in blue has been a significant area of resistance over the last couple months and quarters. What I'm highlighting here is just areas to where we've tested the 200-day moving average and then proceeded to collapse. As you can see, we broke through the 200-day moving average, in late March. The EMA ribbon is continuing to point down, and I think it's a matter of time before we test and re-break the 200-day moving average. So again, on the Dow and S&P, I'm definitely very bearish in terms of what I think the technicals are telling us just from an overall trend standpoint. Looking at our watch list, one entry that is very entertaining for us. We went short this today is EHTH or eHealth. Overall, this trend has been completely bearish over the last couple of years. They had really positive earnings. They had, I think, a beat of 70 cents EPS, which is pretty magnificent. That's why you saw the gap up. But one thing I'm definitely keeping an eye on is the decreasing volume after the break. As you can see, there's significant selling pressure today, which is when we went short. So members have the specific price we went short, our future plan for this, our stop, and our target. So unfortunately, I can't disclose that on the specific video, but nonetheless, it's something that we're definitely watching this closely, and we think there's significant downside to this in the near future, where we can make a lot of money on this going short. So that's one position that we're definitely keeping an eye on. Other watch list stocks in terms of what I think we're looking at for tomorrow, if I remember correctly, we had MFA was one, which is another short option for us as a test of the 200-day moving average. There's volume patterns that I'm watching here that I think are very bearish, but I think, a short position here would be ideal as we continuously cannot break through the 200-day moving average, and I think the trend downward continues. So that's one play that we're continually watching just for the right time to go short. Another is AMD. So this was a gap play that I saw late last week. Earnings play shot up. What I was looking for was a break of the high or low of one of this big candle. As you can see, we're seeing significant weakness continue, through this consolidation phase. And one thing that's definitely caught my eye several times is the fact that, we've held the lower end of this trend line for some time now, but I think it's starting to break and test, that lower level. Once it does, as you can see, volume is definitely decreasing. I think we're going to slowly see a trendward back down to fill this gap. So they're really the two plays that I'm watching going into tomorrow. Again, they're both to the short side, kind of matching our overall thesis for the market. That said, we've done really well so far. We're offering a free trial for any of the people that are watching this video that would like, to give us a test run for 7 days. Just use the coupon code free trial when you go to checkout. Risk-free completely, so you don't have to pay anything for those 7 days. Cancel at any time. You don't have to worry about paying anything. So shoot me an email at kcapitaladvisors@gmail.com if you have any questions about the trial or any of our videos. And hopefully we see you in the community soon. Talk soon, guys.